Hi everyone. What we saw today was a pretty negative day overall in the market. Overall, I wouldn't say that it was too bad, but you know what? When we start adding up all the distribution days that we've had lately in the Nasdaq, as we've taken this last little leg higher in February to March, and we combine that with the distribution day today, and the weakening relative strength line on the short-term basis, that's that white line below the big thick one, you can see that there is indicative signs that maybe this most recent trend higher was kind of a fake out to new highs. But we'll see if the selling continues. We'll take measures accordingly. This also is probably one of the reasons why all the recent new longs have been so mixed. We've had some that have worked well, but we're getting tons of failures in a lot of the new signals, something we weren't getting throughout 2013. So it might be time that the market wants to get sick. Plus, all those huge reversals and all those fuel cell battery stocks today was just absolutely crazy to see how quickly gains can vanish, as Plug was down 41% today alone. But there were so many others that that's not one of them. ALTI was one that we were watching, that it hit the whole thing. FCell was another one, down 16% today. Huge volume. So I would think that these stocks have all topped. And now what I'd be doing is setting up intraday alerts for breakdowns in these, because a lot of them ran up on hype, and that means if you're going to go from $1 up to almost $12, you can probably go back to $1. So I would, if you're a day trader, I would definitely have a lot of these stocks on watch. As for us, before I get to what we're going to do tonight, I have a lot of sells. Craig is a full sell. It has failed its long signal. SFM is a full sell. It has failed its long signal. SPWR, same story. DDD is finally closing below the 200-day moving average. That means we are finally done with it. And even though you can say that we wasted a lot, still we're still leaving on that last itty bit amount that we had left with 62% gains. But going back to the cut loss ones, Juniper failed the 50-day moving average, so now it is completely done. And one of my biggest losers, because I sold 50% of it here, but I kept holding on to it thinking that it could base out and move higher. But finally, Cool has failed, so that's also a full sell. Various other partial sells. VIPS is closing below the 10-day moving average and filling in that gap, so that's a 25% sell. CMGE is 50, PHM is 50, QLYS is 50, EOG is 25, SCOR is 20, DHT is 50, BNCN is 25, SCTY is 25. What you'll notice on a lot of these, APAM is 25, is that they're still holding above the low a day of the signal date, so technically all of these are fine. JSO is a 50% sell, EGRX was 25, SB is a 50% sell, KNDI is 25. But the one thing that you do notice about all the partial sells is that there wasn't really any ugly sell-off on huge volume. And you probably also noticed that with our full sells, none of them looked disgusting. So the chances of the market finding a floor here, maybe around the 50-day moving average, is quite high, and I wouldn't throw it out the window. However, in case we do continue to sell off, I want to go ahead and begin my hedge in the Russell 2000 for one reason. The Russell 2000 has failed this gap up. So the Russell 2000 has failed this gap up. What you see here is that the Russell 2000 that day opened up at 1187.28. It is closing at 1187.05. That is below the low of day of that signal date of that Bible gap up, what so many people thought it was. However, we have to remember that move higher by the Russell 2000 took it outside of its upper trend line. And this is going to be kind of a half-ass upper trend line here. But you can see that it's consistently found resistance at all those areas. And then with that gap up day, it gapped up outside of the channel line. With it coming back into the channel line on heavy volume, which you can see in MarketSmith, it's definitely one of the indexes that I want to watch to put on my short position. So SRTY, all available account capital, will go into this. Now tomorrow, if we sell off again and or close in the lower half of the intraday range, another 5%, maybe 10% if all right carnage happens, will go into the SRTY. And I'll continue to add if we continue to sell off. But for now, things don't look too bad. I mean, I still got some stocks that are doing great out there. GWPH, POWR, with that gap up now gives us a gain in our remaining position since December of 2012 of a 291% gain. And GWPH in a very short amount of time has produced a 43% gain. So there's still some winners out there, but the market is a little choppy right now. So be careful out there. Invest accordingly. It's best to keep a little neutral stance right now. Aloha.